Hi, welcome to the Market Alert for Friday, the 13th of September 2019. So, the momentum stocks that have been melting down have stalled, and stocks jump on Draghi and Trump. However, they sell off towards the end of the session. And the reason for this is this absolutely not. Stocks tumble after White House denies it is considering an interim trade deal. If you noticed at the first part of the session yesterday, the market moved sharply to the upside. Let's just grab this. Just wind back a bit. Super Mario was out yesterday, and they're now calling it Q Eternity because there doesn't seem to be any end to his printing shenanigans now. 20 billion euros per month, more negative rates. Although there could be limits on this, but he can certainly do it for 12 months. So, well, he's not going to do it. He's jumping ship on the 31st of October, and the convicted criminal that is Lagarde will be taking over to pursue this nonsensical approach. Amazing. Let me just show you this before we just get onto this, looking at the details here. I just want to share this final sentence here. This is the drilling down into the headlines that we've just seen about Momo stocks and whatever. But at the bottom here, it talks about Draghi, and this is sums it up beautifully. And then there's Draghi, who just promised to more of what's not worked for a decade to fix everything. And there's absolutely no cat in hell's chance of printing more money, going negative on rates. It's never worked, and it will never work. And yet, this is what the stock markets want. They will not allow a recession. They will not allow the stock markets to fall to fair value. And they will do everything in their power, that is the central banks, to keep the illusion alive that we recovered from 2008, and we haven't. The problem is we're going negative on rates and doing what he's doing. He's putting even more pressure now on all of the European banks, which are in the proverbial, shall we say, already. These people are just unbelievable. They're anarchists, the financial anarchists. They don't care about how it affects people longer term, as long as they are seen to be having done the right thing and what's right for them, and the 1% elite who just benefit from the bubbles that get blown by these decisions. It's unbelievable. However, saying that, the market wasn't too thrilled because they wanted 30 billion plus per month to soak up all of the debt, the bond buying program, and then the Dow fell sharply to begin with. But as we've seen before, we know what happens. Prices rallied. This is what I'm talking about now. This was a Trump tweet or rumour that there was a deal with China, and then eventually, scrap that, shall we? But what's interesting here from a technical analyst point of view is that immediately this gives us the cue that the market is going to turn around, because we have the 76% retracement. And we then go on to where the market had this rumour to begin with. And then they can just back this by saying that Draghi has sorted things in Europe once again, even if it's only for a couple of minutes. And the market then moved higher. And then, of course, as we just saw with the fake news, the market tried to go short. The first trade failed, unless you placed a stop above the recent high over here, and then the market sailed into the close right back down to the 76% retracement area there. And overnight, markets are just sort of steady to higher. Their prices back above the 200 bar moving average. And if we look at the daily chart, you will see that we are heading back to the all-time high. It's Friday the 13th. Why couldn't it do it? Simple as that. Going to the weekend on a positive note, with the markets back on the all-time highs, everything is fine and nothing to worry about. We're going to spend the weekend actually looking at the implied volatility charts, the longer term charts, because the frequency of these corrections is far more than it has been for a long time as well. So again, that backs up the theory that they're doing everything they can to bring the markets back, because it's tired, basically, run out of steam, already oversold, already overpriced, overvalued. But again, you've got to keep the political illusion alive that everything's fine. Trump goes up for re-election next year, 2020. So it's very rare that a president who ends up in a recession during an election campaign actually gets elected. So they're going to pull all the guns they can to actually move this market and keep it on the highs. And if they can't, well, he's probably doomed if that's the case. News today. Well, a bit pointless really, as we've come to realise, but core retail sales are out today for the US at 1:30 p.m. Nobody takes any notice of this anymore. What they're interested in is the big stuff like QE, dropping interest rates, the potential for dropping interest rates, trade deals with China, and ultimately what Trump tweets out. What a mad world of trading. If you've been around as long as I have, nearly 30 years in this, when it used to be sane, we had fair value, the markets were allowed to go through their cyclical trends. It was great. You could actually foresee and predict. I mean, we can predict now, they just don't want it to drop, but it was a natural behaviour. Whereas now it's just all news driven, and that's with the advent of the internet and how quickly information is spread through smartphones and news services. But the pound yesterday sideways, as you can see there. Boris won a court case in Belfast. Well, he didn't. The case was thrown out that was brought about the peace agreement going to be affected by a no-deal Brexit, and the judge threw it out saying it was political. I didn't see that in the mainstream news at all yesterday, apart from Bloomberg, and then the pound recovered after this. But a bit messy in the pound at the moment, because obviously it's waiting for Tuesday's decision on the Supreme Court on whether Boris allegedly lied to the Queen. You couldn't make this stuff up. You really can't. So the pound, as you can see there, stuck in a sideways move there, but looking bullish at the moment. And if Parliament gets recalled, I don't know what powers the Supreme Court's got as far as political decisions are concerned, especially where the Queen is part of it, but I'm not a constitutional expert, no desire to be, and just watching the market's reaction and taking advantage of it through trading is what I'm interested in. But again, you've got to keep an eye on this stuff at the moment, because it's so ludicrous and has a big influence on what's happening in the markets. So the pound at the moment rallying because there is the chance and the prospect that we could see a bit of interest next week, Tuesday, when the court case goes to the Supreme Court from Scotland to the Supreme Court. Bizarre. Mad world. Absolute mad world. Right, Bitcoin managing to rally yesterday and break that bit of a downtrend that we've seen, and moving up to the 50-bar moving average through the 20-bar moving average, which we can see there, the green line, banging its head against this at the moment. In the 4-hour chart, also turning around and heading back towards, yes, you've guessed it, we're just looking back above the 200-bar moving average. And as we spoke of yesterday as well, you can see the market coming up to 76%, or coming down to 76% there. As prices put in this low, they dropped. They went below the low, but they closed back above the 76% as well. This is something else that you want to take note of. You'll also see from this high to this low that the market is stuck at 76% here as well. So no surprise. So watch prices here. One thing you can do when you see this sort of pattern is there are two scenarios that are going to happen here. The market's either going to come back below here, come back and bang its head against the 200-bar moving average and move south. Alternatively, you've got these lower highs that are going being formed here at the moment, and you can sit with an order to buy above these, and then just watch out for the resistance to the left, because then it will confirm that it's now going to stay above the 200 bar moving average, and you'll see that in the smaller time frames. So yesterday we've got the market trading lower. We then see the volume increase, and then the market moves higher. It trades through the 200 bar moving average, which you will see here. We've got from this low to this high 76%. That's what I'm just talking about in the 4 hour, and the market moves higher. And then as we reach the top of this move from the high to the low, 76%, market closes back through it, and then it see the profit taking coming in until we see them buying back here, and then the market moving back to the upside. There's got to be a way of programming this in to make life a bit easier, so that you don't have to see it, but it's just the way that my brain works. I can see these patterns evolve, and then it's just a matter of trying to write the rules around them. This is something that has appeared over the last 18 months or so, that I'm now trying to formulate and put together into some sort of algorithmic code to get added into the software. Okay, that will do it for this one. Let's see how the market reacts today. There's no real news. Only the retail figures, and that's not going to be of any concern to the market. So it's over to Trump and his tweets, and what other fake news can be thrown at the market to move prices. So with that, as ever, thanks for watching. Have a great weekend. See you in the next one.